Your husband dies on a Tuesday, and by Friday, your joint bank account is frozen. You can't touch a single dollar in it. It happens to Canadian widows every week, and 3 specific rules decide whether it happens to you. Stay with me until Rule 3, because that's the one most people get completely backwards. Number 1. The way your account is legally titled decides everything, and 2 names on the statement is not enough. Most couples assume that because both names are printed on the checks, the money simply becomes the survivor's the moment one of them dies. That's only true if the account is set up as a joint account with right of survivorship. That exact phrase is the difference between keeping your money and losing access to it. When right of survivorship is in place, the balance passes directly to you, the surviving owner, outside the will, and the bank does not freeze it. You can pay the funeral home, the property tax, and the hydro bill the same week. But here's where people get hurt. A lot of accounts that look joint were actually opened years ago as the husband's account, with the wife simply added as a signer so she could run errands. In law, that is not survivorship. That is the husband's money, and on his death it drops into his estate. The bank freezes it, and now you cannot withdraw a dollar until an executor is confirmed, and, in many cases, until probate is granted. One quick tell: ask the branch whose social insurance number the account reports interest under at tax time. If only your husband's SIN appears on the T5 slip, you were almost certainly added as a signer, not an owner. Take Margaret in Hamilton. Her name sat on the checking account for 34 years, but it had been opened in 1990 as her husband Bill's account, with her added only as a signer. When Bill died, the branch froze $180,000 overnight. She waited 11 weeks for probate, paid $1.950 in Ontario estate administration tax, and had to borrow from her sister to cover the $9.400 funeral invoice, all because of one missing phrase. While she waited, the $412 property tax installment due that month went unpaid, and the city added a 1.25% monthly penalty on top. Contrast that with her neighbor Joan, whose $210,000 account was properly titled with survivorship. Joan walked into the branch with a death certificate, and the money was in her sole name in 48 hours. No probate, no estate tax, no waiting. In Ontario, that tax runs $15 for every $1,000 over $50,000. So a $200,000 account can cost about $2,250 in probate fees alone, plus weeks of waiting. The typical mistake is never asking. Couples bank at the same branch for 30 years and simply assume, and the bank, by policy, freezes on the mere notification of death, often before you've even planned the service. So this week, call your bank and ask one direct question. Is this account titled joint with right of survivorship, yes or no? Get the answer in writing, by secure message or printed confirmation, not a friendly "don't worry" over the counter. If the answer is no, ask them exactly what it takes to retitle it properly while you both are still alive. Usually a 10-minute signing of a new account agreement at the branch, at no cost, because after a death it is far too late to fix. And before I get to number 3, remember, Rule 3 is the one that freezes the account of couples who did everything else right, so don't click away. Number 2. The moment you add anyone other than your spouse to that account, you invite a freeze. This is the trap that catches widows most, and it happens with the best intentions. After your husband passes, money feels heavy to manage alone, so you add your adult son or daughter to the account just to help pay the bills. It feels harmless, but under Canadian law, when the joint holder is an adult child rather than a spouse, the bank does not assume the child owns that money. It applies what's called the presumption of a resulting trust, settled by the Supreme Court in Pecore versus Pecore back in 2007. The funds are presumed to still belong to you and your estate, not to be a gift to the child. That presumption is no formality. In the Pecore case itself, the disputed account held roughly $950,000, and the entire court fight was about who really owned it. So on your death, instead of the balance flowing quietly to that child, the bank can freeze the entire account and treat it as part of the estate, to be split according to your will. Doris, 74, in Winnipeg, learned this the hard way. She added her daughter Susan to a $60,000 account after her husband died, purely so Susan could pay the utility bills. When Doris passed, her 2 other children demanded their thirds. The bank froze the full $60,000, and the fight ran 14 months and cost roughly $12,000 in legal fees, leaving each child about $16,000 instead of the $20,000 Doris pictured. That is the pattern. A joint account, 3 children, one added only to help. The mistake is confusing convenience with ownership. If all you want is help paying bills, you don't need a joint account at all. You need a power of attorney for property, which lets your child pay your bills and manage your money while you're alive, without giving them ownership or triggering a freeze when you're gone. And a lawyer will draft one for around $200 to $400. When you sign it, make sure it's a continuing or enduring power of attorney, the version that stays valid if you lose capacity, because an ordinary one dies the moment you can't make decisions, which is exactly when your child needs it. Doris's $12,000 fight would have been prevented by a $300 document. If you truly intend to leave that money to one child, say so in writing, in your will, so the presumption can't be used against your wishes. A single dated line, "I gift the balance of account number ending 4471 to my daughter Susan," is enough to flip the presumption in her favor. One signed page today can keep an account open next year instead of frozen for over a year. Number 3. And this is the one couples who did everything else perfectly still lose to. If you live in Quebec, your joint account is frozen by law the moment the bank learns of the death, right of survivorship or not. This shocks people, because everywhere else in Canada survivorship protects the survivor. Quebec does not recognize automatic survivorship at all. Under the Civil Code, the financial institution is legally required to freeze a joint account when one holder dies. And for years, that meant even a devoted spouse of 50 years was locked out of the household money on the worst day of her life. Quebec changed the rules in December 2022 with Bill 2, and here is exactly how it works now, so you're not caught off guard. As the surviving spouse, you can request the release of your share, by default 1/2, but only in writing, and only after you ask. The bank will not simply hand it over, and it will not release $1 more than your half without the succession being settled. Consider a widow in Laval, married 51 years with $30,000 in the joint account. When her husband died, the whole balance froze, and only after she filed a written request did the bank release her $15,000. The other $15,000, his share, stayed locked in the succession for 5 months until the estate was settled. Even her own half wasn't instant. The branch took 8 business days to process the request. Down the street, a widower named Gérard didn't know about the written request step at all. He assumed the account was simply gone, went 8 weeks without touching the rent money, and fell behind 2 months on a $1,300 mortgage before his notary told him he could have claimed his half on day 1. And if the joint holder was not your spouse, an adult child again, for example, the account stays frozen in full, no 50% release at all. So on a $40,000 Quebec account, the very best case is you write a formal request and eventually access $20,000, while the other $20,000 sits locked. The mistake Quebec seniors make is assuming the joint account is their emergency fund. It isn't. If you're in Quebec, keep a separate account in your name only, with at least 2 to 3 months of expenses, say $6,000 to cover rent or property tax, groceries, and medication, so that if your spouse dies, you can breathe while the succession is sorted. And learn the written request step now. The exact form is a letter to the branch stating you are the surviving joint holder and requesting release of your half, attached to a copy of the death certificate and the act of marriage, because grieving is not the time to be reading legislation for the first time. So here is the truth in one line. 2 names on an account does not mean the money is yours the day it matters. Right of survivorship, who else you add, and the province you live in. Those 3 rules decide whether you keep paying your bills or get locked out for weeks. Your one action this week: call your bank and ask, in writing, what exactly happens to this account the day one of us dies? If the answer isn't the one you want, fix it now, while you both still can. If this could help you, or someone you love, subscribe and share it with your family today. The people who find out in time keep their money, and the ones who don't find out after it's gone.
Mm-hmm.